Hello everyone, this is Razan Hilal, market analyst with Forex.com. Today is January 13, 2026. We're looking at the start of the US earnings season, with US indices trading near their record highs on a cautious tone ahead of the US CPI reports and amid the persistent Fed independence risks and global geopolitical uncertainty. Looking at the S&P 500 chart from a weekly time frame perspective, we can see price consolidation risks below the 7,000 psychological mark. Now, we did manage to have a high of 6,986, slightly below the 7,000 psychological checkpoint. And if we do manage to have a clean hold above that level, then we may be expecting or extending bullish forecast towards level 7,200, 7,400, and 7,600 in line with Fibonacci extension ratios, with the Fibonacci tool placed between the lows of April 2025, the highs of October 2025, and the lows of November 2025, where we have the first 7,000 mark near the 0.272 Fibonacci extension ratio, and the next ones are the 0.382, 0.5, and the golden 0.618 near the previously mentioned 7,600 mark. Now, from the downside, if you do manage to have a potential pullback or overall market drawdown with extended risk aversion, then we might be expecting potential short-term support between levels 6,740 and 6,680, and the clean hold below that level is expected to extend bearish forecasts all the way down towards level 6,400 and 6,140, which aligns with the previous highs extending between December 2024 and February 2025 for potential buy the dip opportunities. Now, if we also look at the relative strength index indicator from a weekly time frame perspective, we can see an overall bearish divergence with the overall price action below the 7,000 mark, which is reinforcing an overall cautious outlook amid rising global geopolitical frictions. Now, looking at the Dow Jones chart from a monthly time frame, we have the overall cautious outlook reinforced with the overall contracting structure of the Dow Jones since the positive rebound from the lows of 2020, which may play out as a diagonal. If we do manage to have, or if this overall structure is confirmed to be a diagonal, then we might be expecting a steep correction before the overall primary trend is back on track. Now, looking at it from the upside, we're currently challenging the 49,600 resistance, and the clean hold above that level and further above the 50,000 psychological mark is expected to extend gains all the way towards levels 51,100 and the 52,900 to the 53,000 mark, derived using Fibonacci extension levels from with respect to the overall wave between the October 2022 lows, the November 2024 highs, and the April 2025 lows, respectively. Now, from the downside, should the overall diagonal scenario play out, we can be expecting potential support or buy the dip opportunities aligned with levels last seen between, or the resistance level between November 2024 and February 2025, which is expected to turn into a support, aligning also with the lower bound of the overall structure, connecting consecutive higher lows between October 2022, October 2023, and May 2025, respectively, which is near the 45,000 mark. And the clean hold below the 45,000 mark is expected to extend steeper bearish forecasts, possibly aligning with levels 42,000, 40,000, 41,000, and all the way down towards the 37,600 mark for potential long-term buy the dip opportunities. Now, we can also see the relative strength index indicator from monthly time frame is also aligned with overbought levels last seen in November 2024, preceding an overall drop between November and April 2025, and also last seen in August 2021, also preceding an overall drop that extended between January 2022 and September 2022, which is also reinforcing an overall cautious outlook for the current price action and the overall state of the US indices at the start of 2026, in line with the uncertain outlook for global geopolitics.